This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, July 28th, 2016. Euro-dollar. So a bit of a bounce in the euro after the market was supported ahead of some key support from June 24th at 109.12. But overall, while we have seen an impressive bounce in Wednesday trade, the overall price action remains focused on the downside while the market holds below 111.87. That's a potential lower top that was seen back on the 5th of July. Any rallies therefore should be very well capped ahead of this level in favor of the next downside extension below that key support at 109.12. Only back above 111.87 will take the immediate pressure off the downside. Sterling dollar. So cable continues to consolidate off its recent plus 30-year lows just under 128, and the market could be poised for additional upside over the coming sessions. However, this upside is still classified as corrective, and while the market holds here below 138, the price action continues to favor the downside in favor of the next lower top and downside extension back towards and eventually below those recent lows and down towards next key psychological barriers at 125. Again, only back above 138 would really take the immediate pressure off the downside. Dollar yen. So dollar yen looks to be carving a next lower top at 107.49 after stalling out in the previous week, and we'll see a strengthening of this outlook if the market can establish back below recent support, which comes in around 103.99. Look for a close below 103.99 to confirm or strengthen this outlook and accelerate declines back towards those recent yearly and multi-month lows down at 98.99, going back to the 24th of June. Euro Swiss. So Euro Swiss remains confined to a pretty tight consolidation, largely between 108 and 110, and the market has seen a little bit of a bounce out from that recent support as it traded down towards 108, back towards the 110 handle. But again, ultimately, this market hasn't really gone anywhere. If we see the market establish above 110, we could then see an upside extension back towards next key resistance at 111.30, and if we see a breakdown below 108, this could set the stage for a more significant decline back towards the 2016 lows and below. Those 2016 lows coming at 106.23. But in the interim, while we hold in between 108 and 110, more choppy consolidation is to be expected. Aussie dollar. So Aussie looks to have carved out a lower top, or looks to be carving out a lower top at 76.77. That's that high that we saw back on the 15th of July, ahead of what should be the next downside extension, eventually back towards key support on a medium-term basis at 71.45. Really, only a break back above 76.77 would compromise this bearish outlook. Dollar CAD. So dollar CAD finally saw a major breakout this week, taking out critical resistance at 131.89, and this sets the stage for the next major upside extension in this market into the 135 to 140 area. If we do see any setbacks, they should be very well supported now ahead of recent support, which comes in around 128.63, but ultimately only back below 126.55 would compromise this constructive outlook, this newly adopted constructive outlook for dollar CAD. Kiwi dollar. So Kiwi has found some support in the mid-69s after seeing a sharp setback from those 2016 highs at 73.25. But any corrective upside from here should be very well capped ahead of 72 in favor of a lower top and breakdown below that recent support that we saw around 69.50 and towards next key medium-term support at 66.75. At this point, only a daily close back above 72 would delay, while above 73.25 would negate the immediate bearish outlook. SPX 500. So the S&P 500 continues to consolidate just off those record highs that we saw earlier this week at 2179. There is risk for the market to continue higher to fresh record highs towards key psychological barriers at 2200, but the market is also showing signs of exhaustion, and if it can establish a close back below 2150, this will do a good job of accelerating declines and suggesting that an interim top is in place. So right now, 2150 and 2179 are the key levels to watch below and above. Gold. So gold setbacks have once again been very well supported. We talked about the market coming into some previous resistance turn support around 1300, and the market has been supported into that level ahead of what should be the next major upside extension and a continuation of this uptrend that we've seen over the past few months through the 2016 highs around 1375 and towards the 1400 to 1450 area further up. At this point, only back below 1250 would really compromise the current highly constructive outlook for gold.